Okay, good morning. It is October 15th, around 10:30 Eastern Time. I wanted to bring James Anderson in. He's been very busy. He just got off an interview with CNBC India, but we cut a video on Monday talking about what was going on and on kind of the physical side of things. But I'm getting a lot of questions about where is the price going to go. I've got a lot of friends ask me that have been doing this for a long time. Is 50 the top? I remember the last time personally we were at 50. And so I wanted to bring James in real quick and answer the simple question of James, is there a path to $100 silver? Where are we now? And what does the path look like to get to $100? Not beyond. I know there's different scenarios, but I'm just saying, is there a two-bagger chance from $50 at the, well, I guess it's over $50. It's at $52 this morning, so it's climbing again.
Yeah. Yeah. No, there definitely is. And I'm going to show you the simple math of it, Chase. The one thing that I find kind of cute about the whole thing is, I don't, if anyone's been paying attention, CNBC ran an article the other day talking about, analysts, talking about price of silver going to 100, and it was under their pro section. So people couldn't read the article because it's like a subscription
Okay,
service. But
nice.
now the cheerleaders of stock markets are now starting to put headlines out like that. So now it's okay to say that kind of stuff. But
Okay.
before we were nutballs for saying this kind of stuff.
Yeah.
But yeah, now we can say it. Okay. But let's start off. The math is pretty simple. Let me share my screen with you real quick.
Yeah, please. Let me
Yeah.
see.
One sec. Let me get that up. Okay. Let me get to the top here. All right. So what we're looking at here is a non-logarithmic chart of gold in the United States on the left, going back to like 1975 when COMEX started trading, and silver on the right, going back to 1975. So I had constantly harped on the fact when we were in this big trading range here and going back and forth and battling with 2000, that ultimately when we got over 2000, it would become, the support for the launch. So that's what's happened. I mean, we basically have gone from 2000 to over 4000. So in simple math terms, that's just a doubling in spot price in
Yep.
short order, right? And here we are with silver, the ancient $50 nominal high. It's finally been passed, and now we get the wall of worries. People worrying about whether or not 50 is going to hold. And given the circumstances in London, my suggestion is it's not only going to hold, but it's probably going to become a launching point as in order to, if silver's actually going to be chasing gold's performance, and then ultimately at some point outperforming them. I mean, to now, silver has the double nominally just to match what gold has already done, right? So
Ju-
the
Just
togs,
just a match. Yeah, just a
yeah,
match. And
just
normally
a
it does outperform, but
mhm. Just a match. It's already telling you that triple digit silver is destiny, and we don't even know where gold will be when that happens, right?
exactly. Yeah.
And I want to show you this chart real quick in logarithmic format because the non-logs look kind of scary, but these are a little bit better because they go back so far. And it's not as scary when you see gold on the left-hand side kind of doing what it's done before and the world didn't end. Like, see, the world didn't end in 1970 and 1980, right?
Yeah.
And the dollar didn't go up in hyperinflation smoke. No promises that's the, occasion in the future. I'm not, saying that this system will survive or not. What I am telling you is that we can see it right here, right? There's the 2000 area where it did all the battling for all those
Yep.
years. And here it is doubling to 4,000. But you can kind of get a sense of look at how far, like it can ride very far and for a long time. I have the contention that 2030s is how long this thing goes into. On the right hand side, we have silver here. Same thing. And we have that launch pad on the right hand side. And there's triple digit silver is right around here. And multi $100 silver is up in
Yeah.
here. And that's the concept.
Yeah, I mean, this simply explains silver seems to always lag gold. You can see the gold breakout at 2000, and now you can see 50 is basically kind of that same support level for silver that it hasn't been a battle so far yet, unless I'm missing something, James, because it's held over $50 now for 2 or 3 days. So I'm curious to see what happens if it goes back down and really tests 50 again, or if it's just going to run,
If you've been
right?
watching the price action a lot, you can see what they're doing at night. They're coming into liquid markets like the Hong Kong exchange, and they're bombing as much as they can on the short side. And it goes down for like a couple of hours, and then
Yeah.
slowly but surely fights back. So it's just been persistently an effort to kind of keep it in line, to keep it in check and buy time. But ultimately, at some point, this thing's just going to rip. I mean, we're going to start getting God candles and it's just going to start really ripping higher and running to 60, 70, even within this year is something that's possible.
Yeah, I had some questions about that, but I'll wait till after we get through looking at the charts.
Okay. So the next chart is interesting because we do a lot of looking around the world. And around the world, I like to look a lot of times at currencies that have yet to find a record nominal price in silver. And this, is, for instance, is the Japanese yen, which is an important currency in terms of global finance. In the top part here is the Japanese silver price. The bottom is the Japanese gold price. And I looked around today and I saw in Japan, the random silver rounds are selling already at the nominal price high of 1980, which is around 11,600 yen per ounce. Okay. And right now, of course, they have a 10% VAT for their silver imports and their
Yeah.
gold imports.
Sales tax. Yeah.
Yeah, sales
What we do
tax.
now. Yeah.
Yeah. So I mean, so let's say it's roughly 9,000, right? When you get all that bullion as a dealer, you can then turn around and sell it to the public for 11,600. So it's gigantic,
That's
pre
insane. Yeah.
spot. Yeah. And so here we are. We're looking at these two, and again, we're looking at the structure of the base of the breakout. At the bottom here is gold. Gold, matched its 1980 high in 2020, and then it blasted off, and it's tripled in nominal fiat yen terms. Here we are with silver at the top. Silver's not even gotten to its nominal 1980 high, right? And those are in 1980 nominal. The yen was a lot more powerful then versus today.
Mm.
So it has the ability to triple from that 11,500 just to match what gold's already done, right? So here we are. We have a lot of stored energy and we have pin-up demand. People are in that local area are willing to pay through the eye to get out of yen and get silver.
Yeah. Is that just a factor of the supply crunch that we're in now, also met with a large amount of demand in Japan, or why is
Yeah.
the premium so big there? We've been warning, and we warned on Monday. Like I think you're going to see these types of premiums eventually show back up in the U.S. if this continues
Mm-hmm.
to go on, right?
Correct. Yes. Yeah, it's a combination of a few things. Japan historically has always been more of a gold bullion and platinum bullion buying place. But silver, I think there's a lot of people out there like Bruce Ikemizu, who's out there. He's like the head of the Japanese Bullion Association. He's saying to people, young kids especially, you need to look at silver as well because it has
Wow.
just so much upside potential. So the word is getting out, I think, amongst the young kids, and you guys know how the internet works.
Yeah,
It gets around quickly. And so I think it's a combination of a bunch of factors. It's probably not a huge amount of inventory at these different dealers, but where
yeah.
it is, they're charging a
They're
massive.
wanting it. Yeah, they're
Yeah.
taking it. It's
Yep.
amazing.
So let's move on to the next. This one is another one we always look at. This is the Swiss franc, which is another supposed safe haven currency. The left-hand side here is the Swiss gold. Breakout is roughly 1,700 where it broke out. And now it's almost doubled. It's almost 3,400 Swiss francs. So let's just say double for the easy math. And here we are. Their old nominal price high in 1980 was like 77, and they're still down at 41, right? So I mean, it's amazing, right? So
Bagger. Yeah.
So it's not only you got to get up to the 1980 high, but then you got to double again, right? So you got to get 160. So you got a four bag essentially just to match what gold's done. Yeah, it's pretty nuts. And what I'm hearing from people in Switzerland is that silver is very hot right now, but I don't think they're at unobtainium demand levels yet. But at some point, it will become that. I'm pretty sure.
Well, yeah. Regardless, we're just looking at the data.
Yeah,
right?
yeah. This is just simple math. I mean, this is kind of how the tautology of precious metal bullion bull markets work. Like they fight at a certain support level and then they break out, and you kind of do the math on the silver and kind of look out in the future and think, well, if gold's already done it, silver's going to probably match it in performance terms.
Pass it, yeah.
So this chart is something I don't do enough of, and I probably should do it more often. This is the Dow versus the gold. Data goes back to late 1800s. What you see here is like a shape where it's like, it gyrates a lot through history. And so you see it, more or less skewing up, but also skewing down. So like it'll overshoot on the up and it'll even overshoot on the down. Yeah. Right now we're at a level of like, I don't know, what is that? Maybe 11.25.
11, yeah.
Right. And so in 2011, in that bull market where gold went to 1900, we got down to like 5.7.
Yeah, so just to be clear, it took in 2011, it took 5.7 ounces of gold to buy. This is the Dow, right? To buy 1 share of the Dow. Okay.
right? And today, not only, just so people know listening, the Dow Jones Industrial Average is just 47,000 nominally.
That's
Okay.
insane.
Yeah, I know it's a crazy number. But I want you to understand, like this, where we are here, we're inevitably going to go back, I think, to the 2011 low point, but then we're probably going to overshoot that and go back
Yep.
down toward what happened in 1980. You got to remember, like that was pretty much the last time this system got called into question by gold, and there was a full accounting of all the extraneous fiat currency creation at the time. And you had a situation for a little bit where 1 ounce of gold could have bought you the Dow. And
That's
today,
amazing.
yeah, the Dow is 47,000. So you can see
Yeah.
how ridiculous things could actually possibly get. That's not to
Yeah.
say the Dow stays there
I was gonna
nominally.
say, to
You
be
know,
fair, the Dow could come down,
it could
right?
come
But
down.
it
Yeah,
doesn't matter. The picture is clear of how much
yeah,
further there is
yeah.
to run in these
When
markets.
when I look at this, I see this go like this, right? It goes from an
Yeah.
extreme to another extreme, then it comes down, then it does a dead cat bounce, and then eventually it goes beyond that and comes down here.
Yep.
That's the concept.
All right. So that's gold, and you have one for silver as well, right?
Yeah, this one's the silver and S&P 500. So we're just dividing the
Okay.
S&P 500 by the spot price of silver. What's the S&P 500, like 6,700 roughly right now? And you divide it by,
Yeah.
yeah,
Which
yeah,
which is crazy. So right now it's about 110 ounces of silver, let's say.
yeah.
And in
Let's
1980, it got all the way down to two.
yeah, 2.2,
Yeah.
2.25. Yeah,
But
that's how
even
crazy.
still, I mean, in 2011,
Right,
it's in the 25 area. I
25.
mean, we're not even close to that.
I know. We look at where we are. We're well above the 1929, ridiculous 1929 bubble. I mean, we're up here in bubble landia, and look. I mean, the drop down, the rollover, the shape that it's making suggests that we are going to go down, and it's going to shoot and overshoot the 2011 low, and probably get down in these areas. And
Yeah,
later on.
I don't know how it wouldn't, James, because back in 2011, I was sitting there, and what I remember was two things. Maybe three things. One, the rest of the world wasn't as involved in specifically silver and even gold. I mean, we're seeing another all-time record high of gold purchasing by central banks, right? But the
Mhm.
rest of the world wasn't involved in the 2011 run that I'm aware of, that I can remember. And two, I remember at these peaks that you have highlighted here, every person, it was like, what's that old saying? Like, whenever your taxi driver recommends a
Right,
stock for you, it's time to sell.
right,
Like everybody I knew because I was in the business was asking
right.
about silver. People who had no knowledge. We're not even sniffing that yet,
Yeah,
from what
yeah.
I can tell, just being around town. Nobody's still talking about it.
Right. What you have right now is a contention amongst delusional stock market bulls in the United States who still believe in the AI story. And if that thing melts down, it's literally like 30 or 40% of the entire value of the stock market in the United States is all pinned on AI actually working out. I'm of the contention that those people are scammers and they're lying about what it'll do, and it's
Mm.
not going to perform as well. And ultimately, we're going back into a commodity bull market. And in a commodity bull market, crazy things happen. And this is, the all time like that. This is in within people's lifetimes. This happened in the
Yeah,
late 70s.
yeah,
So all you have to do is look back within older people's lifetimes and think, well, if it happened once, can it happen again?
of
My
course.
suggestion is yes.
Yeah.
All the circumstances are pretty much lining up. So this one is average U.S. housing prices divided by silver. It's right now, the latest update was around 13,271 ounces. So, you know, this is the average price, right? Which gets skewed by all the $1 million mansions in the
Yeah.
United States. Even the median is over 10,000 ounces. I was looking at the data.
Yep.
The problem is he didn't have it in a log chart. So you need a log chart to be able to see the space between these things. But look, you can kind of see it's broken down recently from this section. And the 2011 low is probably just over 5,000 ounces it got down to. So basically, if you held in silver and we get back toward the 2011 low, I mean, you basically double your purchasing power a little bit more in terms of average U.S. housing.
Against housing. Yeah.
Yes, and the 1980 low got down to 2,000.
Wow.
All right, so imagine if we got back toward a 1980 level, you basically six-folding your purchasing power or more in U.S. Average housing prices. The final one is everybody's favorite, the spot gold silver ratio.
Yeah.
The spot gold silver ratio has been piercing 80 of late, which is good. It was threatening to kind of start bleeding down into the 70s. Obviously we lived through this COVID era, this tariff era, these extremes on the top. They never last. neither really do the extremes to the bottom. They never last either, right? And that's one thing to remember. Look at the 2011 extreme, look at
Yeah.
these extremes. But we're at 78. And, if you look at the fat of the data, even in this fiat financialized era, the fat of the data is like here. So just to get back to these levels is kind of normal. The problem is people have, they have recency bias. They don't look back at old, times like look at all this time that was down here. This is around
Yeah.
World War II, after World War II, the industrialization. Like we're going back into industrializing on shore in the United States. That means it's going to be very inflationary and things are going to get a lot more expensive, especially precious things like gold and silver. And in those types of tight, situations where central banks are basically buying all the gold, well, the people need to get the silver. And what ends up happening is the silver just drives itself, in relative value to gold. So
Mm.
the concept of us getting back to the 2011 low of 30, I think is a reasonable conservative target. Whether it goes down here for a little while in a crazy mania is totally something that could happen. I'm
Yeah.
not betting farm on that, but I definitely know that 78 GSR is pretty cheap. And later in life, people will be kicking themselves for not taking advantage of
Yeah, yeah. I think we all like the gold to silver ratio because it's so simple to look at, right? And so if we just go back to 2011 alone, I was doing the math before the call here, and silver's got to run to $132 to match gold right now. Now, again, gold
it.
could come down. I'm not
Sure.
seeing a world where gold's coming down with all the demand that's going on. So
Right.
that tells us alone that that would put silver over $100. And that was basically why I wanted to get you on here because I got people asking me, and I'm saying like, hey, I'm not seeing anything that's suggesting that we're anywhere near a top in silver, but let me get James on. Let's look at some data. Let's look at some charts. I know everything that's going on with the LBMA and London and all that. And I guess that's my final question before we wrap up here. We saw a scenario with palladium a couple years back to where they got an extreme shortage, right? And it ran from 600 to 3,000. With everything that's going on, we're still waiting on, I guess, a tariff decision on silver. Is there a potential where we see a moonshot in silver in the short term, just related to all this kind of stuff that's in the underbelly, refiners backed
Hmm.
up, London out of silver, people can't get silver to London. Is there a potential we see a moonshot up and then a pretty strong correction back down as all these things kind of work themselves out, similar to what we kind of saw with palladium?
Yeah, that is totally something that could happen. You could have a situation where the short squeeze exacerbates itself. The shorts have to buy and cover themselves and go out on the market and find 1,000 ounce bars, and that will really drive the price higher. You could have a situation by the end of Q1 where you could be threatening triple digit silver already. It
Yeah.
is something that's out in the realm of possibilities. I know a respected analyst. I respect Michael Oliver of MSA has been talking about this. He's probably one of the most aggressive bulls in silver this year, and he's been proven exactly on. So I don't doubt that guy. I mean, his methodology is pretty strong, and he's really keying on the gold silver ratio as being a big reason because once silver starts outperforming gold, it tends to really get going. And so
Yeah.
he's using a lot of old historical data to make those analog decisions and calls where he says that triple digit silver in Q1 coming this year is a possibility.
Yeah.
So that's how quickly it can happen.
Okay, and I guess I said I was going to wrap it up, but just one more thing. Advice for people out there. I think we're going to see a ton of volatility in silver. Um, any advice to just
Yeah.
pre-warn to say it's going to be a wild ride. Just hang on.
Yeah, I think, the reason why we went through those charts was to kind of ground ourselves in data and math, right? We got to get some of the emotion out of it and get the longer term perspective. And for those out there who have not been in this market and maybe are coming into this market, you really need to get educated first and foremost. You need to understand what you're doing and, so you can be prepared and buy correctly and intelligently. And then you also have to be shrewd and calm because the price in silver will be volatile. It could go to 50 to 100, then back down to 75, 70, and then go from 70 to 150, 170, 200s. So, I mean, it will be a wild ride. But if you're a bull and you have a long-term path, like perspective, and you're keeping data is super important to kind of keep the motion in check and also understand that, the past financial history kind of rhymes in the future. So you look back to see what's happened prior and look at the present circumstances and kind of think, well, maybe we're not there yet. And also remember why you're buying this, right? Why you're buying this is probably because the fiat currency is going more or less out in terms of purchasing power. It's
Yeah.
obviously gold and silver are kind of showing that. So you just want to get on and own the money that's actually gaining relative value versus the currency that's losing tremendous value, right? The US dollar in relative terms this year has lost 12% to other fiat currencies.
Wow.
It is the worst year on record. At least the Trump administration told us they were,
Yeah.
when they came in, they said we want a weak dollar. So they gave fair warning. And it seems like they're allowing gold to run and whatever. It's no big deal. And well, to be honest, it's probably best for us long term to have gold kind of ease our debt loads, to get it moving. So anyways, it's a lot to learn. People who are getting in this market really study, get educated and make sure you find dealers that are trustworthy, people who you can trust, because there's a lot of Johnny come latelys who will tell you a bunch of things that just are not true. So you need to go find people who have good track records and who have credible, sound reasonings for what they're talking about.
Yeah. Excellent advice. As always, thanks, James. I know you're very busy right now, so thanks for your time. And yeah, enjoy the rest of your day. We'll talk soon. I'll be looking forward to your report on Friday, as always.
All right, Chase. Thanks, man.
All right. See you, James.